The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman. This is the Tuesday edition, March the 5th of 2013. And we are looking at a Dow that has broken to all-time highs. So for the first time, you will get newspapers. We'll see how big the print is. I don't know what they call it now. They used to call it pica, P-I-C-A, in my day when I was a graphic artist. We'll see how the font size is. Will the font size match the low back on March the 6th of 2009? 3 years almost to the day. Can you imagine how much money has been lost by people shorting almost all the way up? This has been the most... I remember 1982 like it was yesterday. I remember July 2nd, I got a major buy signal based on the ChapmanWave methodology. Although I was using on-balance volume a lot, that's really what gave me the buy signal. And the actual low might have been just a tad lower, but it didn't matter. I just went full in at that point. And now that everyone talks about Reagan as if Reagan was a hero, I remember the comments. Oh, plastic man. It was day in and day out making fun of Ronald Reagan. Now he's a hero. You know, history has this way of the look-back period. Hardly anybody ever puts themselves in the position of that day. I saw a movie just the other day that basically where you had to constantly keep saying, doesn't look great today, but what were they thinking at that particular time? You know what? This is not to say, I've spoken about this before, this is in absolutely no way on earth would I condone what happened, but you have to understand the mentality of Germany when you had to have a wheelbarrow at $32 billion to the mark. It might even have been more. I don't remember. It was up in the just astronomical figures. You had a wheelbarrow to get bread. I mean, you've got to understand mentality of a particular time. And that was in the 1930s. And of course, that allows dictators to come in. That kind of thing. That's what the United States has to avoid in the next 100 years or more. That we don't go into this kind of mentality that says things are right. But in history, you look back and say, wow, those things were not right. So what would be right is now to have the same size font on the front page of the New York Times. You'll never see it there. But of the Boston Globe, never see it there. Front page that says, Dow at all-time high. And that's the most important thing. Now, I got that out the way. Charts. Oh, I haven't even got my charts up. I was all ready for that. Sorry, folks. Charts. I'm busy waving away and got a chart. Are you kidding if I got a chart? What a silly question if I got a chart. I could do charts here for the next 36 hours and not get tired of that. Here it is. So the chart is up. Stop waving my hands. Look. We've broken out. In my ChapmanWave methodology, I have to call this leg B. I've been talking about it all the time. When I was speaking to Tom just the other day, I said, look, here's a pattern in the ChapmanWave. One of the patterns that I'll be teaching, going over and over in my ChapmanWave methodology. This is the look back that we do right here. Let me just get that chart up. Look, you remember that? I said this is a pattern. We've already done the ChapmanWave stalk leg formation. We've got the head, got the beak, and now we're starting to go up, and we're somewhere over there. And I said, if we break this downtrend line, I call it a falling axe pattern. What the heck is a falling axe pattern? Well, on Saturday, March the 9th, this coming Saturday, 8:30 to 5, I'll be reviewing all these patterns. If you've got my CD introducing the ChapmanWave methodology, you have to have that to be able to take the course. If you've read it, if you've done any of my Master Trader series, if you've done level 1, this is like, I call it level 2 with a review, but it really is a review of patterns that we've seen over and over. They're as relevant now as if it was the very first time you've ever seen it. The Falling Axe, chapter 24 of my CD. It just as it implies, the axe pattern resembles the shape of a falling axe with a diagonal long handle. The blade consists of one downtrend line joining the lower highs and a deeper trend line joining the lower lows, thus forming an expanding wedge or axe blade formation. Remember, I came to all this through pattern recognition. I do formations. I was a visual artist, and that's what I love to do. Yeah, I love the mathematics of it, but it's the artistry that really gets me. Look, here's the pattern. There it is. It explains it. Slide 393 or 476 slides, and explains how you can use the stochastic and the MACD. You don't even need those things. You just need the pattern. There's another one right there. So what am I doing? I'm saying if the price breaks above that pattern, this is the S&P. Let me expand it so you can see it nicely. There you go. If you're looking at Tiger TV, of course I always do this. I forget. I want to see it on my Motorola Verizon Droid. Let me just get it. Okay, so this is what I'm looking at. When, in fact, the price pushes above the downtrend line, it's over there, a downtrend line, and I said if it takes out, and I gave a number, and I said it starts to test 1525.34, the high of the 28th of February, then there's a really good chance it's going to try to test the 1530.94 high that was hit 2 consecutive sessions in a row. And that was the sharpest decline we had in the Dow from a peak D and the S&P. But there's another pattern that we're going to talk about in great detail on Saturday, how you can identify these patterns, how you can look at this and say, wait a minute, it's not exactly like your flat base restart. Well, this is an unconventional flat base restart. What does that mean? It means I've taken a pattern that I developed years ago called the instant restart. It can only happen at peak D, where the low bar can also be the high bar, number one. And then I've said, okay, this is the core. This is what you always look for. Within that, you can look for a slight variation. You've got to understand the core before you can even think of a variation. Within the variation, there's variation B, and that is the unconventional. It has exactly the same premise. And what's so different about this pattern, it says that although in the instant restart you can go to D, but very often the second buy mode goes to an E or an F that's 5 and 6 peaks higher than that starting point. It also says that if you can immediately identify this pattern that I'll spend time on again in this Master Trader series at Babson Executive Conference Center. There's still time to sign up, and it's just a great group coming from all over the show, New York, I believe Florida, and just everywhere. This is going to be one where I will go through the charts. In fact, what I did in the last Master Trader series, live that was 1-to-1, this is not the webinar, I actually went over the charts, which I always take for granted that people are seeing, but not everybody can see these things. And I go over them, over and over all the different time frames of dozens of different charts. And you can see the chart patterns as they unfolded. And it's really exciting. So look what happened. What I said is if you break above the peak D high, that essentially will say to me that is probably, I've got no reason why I shouldn't expect that that's leg B, a brand new buy mode. And the same thing happened in the Dow, INDU. The Dow breaks out above that pattern that I've spoken about. That, in fact, can take you much higher. Well, for my subscribers on my opening call, yesterday, we basically went all in. We had started building up long positions. I have no short positions. And we bought the 200% along the Dow diamonds using the DDM just about at the low yesterday. Whether it's going to succeed or not, I'm not sure. But every bit of evidence that I had says do not look at the short side. Look at the long side. Why? Because if the upside breaks out, the weekly chart is going to go to 1978. I always have to review this because it's so close. Leg B in the weekly chart, that is really positive. Leg C in the monthly chart of the Dow. Let me go through the numbers. 877-927-6648, of course, is the number to call in. And if, in fact, I'm looking at this correctly, I've got to just stretch over here to get all the numbers. Let me just get those numbers. The Dow is up 152 at 14,279. Not only, in fact, I said today, I'm taking my time today. There is so much information. In my opening call, what I'd shown was, now let me just find it here. Oops, that's not the right one. Close it out. Close. Right here. I've got it. Don't worry, I've got it. There you go. I'd shown, let me just move this over here without giving away too many of my subscribers' information. Right there. What I'd said is that the one? Did I finish that overview? Good grief. Did I do that? Is that correct? Was that yesterday's? Where's today's? Yeah, that is. There it is. Wow, I didn't even finish it. Did I send off my overview? Well, I discussed that there was this falling axe pattern in the 120-minute chart. I discussed the volatility index, that it had made a pattern that I call the Eiffel Tower, straight up and straight down. I discussed what the levels were. I discussed that this pattern here was unfolding beautifully and that there should be a leg B. I discussed that in the S&P, I needed the S&P, and that's what I said to Tom when I was interviewed last week. I said, I need the S&P to make that leg up, because if it does that, I get a confirmation that this is a move that should take us to new highs into, it's hard to say because I need to get peak B before I can actually extrapolate, but it should take us into late this week, early next week at least. And that's very important. So the Dow's at 14,000. Oh, what I'd said is, was it on this one or the other one? Yeah, there we are. So close, I said, overview and market today. But the market often does that. And then whoosh, right through the old high like a hot knife through margarine. And that's really important. That's the kind of, you've got to look at these when you test. When the breakout comes or the breakdown comes, it can often be really powerful. So when I look at this, I say, okay, the Dow is now decisively in new high territory. Let me just show you here. It's gone above in a left side, right side price time match. This is 1 month earlier than the end of the left side that I identified as the low bar. This is what is very important. And it says that if the Dow closes decisively above the 14,198 high of October of 2007, that's a really good sign. And it says you've got to analyze where the MACD stochastic is in the monthly chart, and then you have to go to the weekly chart because it's very important to be able to assess exactly where you've come from, and then you can say, this is where we are likely to go. So we got the break coming up. The Dow's up 150, S&P's up 14, Company's up 39, gold is up 2, and I'll be right back. Bonds are down 14.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Dow's up 146, S&P's up 16 at 1541, and the bonds are down 30 seconds. Crude oil's up 19 cents, and it's really interesting that the TLT, which I'm showing right here, I've gone to the black chart. I just want to show you. I think it highlights it a little bit better on the black background chart. This is the 120-minute chart. I cannot tell you how many times in the 100. I just stopped counting. I thought I counted recently, and then I decided, you know what? What's the point? It doesn't prove anything because it happens so often. But the 120-minute chart makes consistently peak Ds over and over and over again, enough for you to consider that it's a swing trade possibility. It's another thing I'll be talking about and going through go to the front page of TFN, and let me just show you briefly right here. This is it, Master Trader Series, and you'll find all the details, and they actually have great accommodation if you need to sleep over there. It's just going to be a fabulous, great food, just a fabulous, and just a tremendous bunch that are coming, because these are people that have done it many times before. They have great questions. They come from all different spheres. So this should be really exciting. But there's that peak D, 115.57 the TLT, to where? To 119.67, and it pulls back, and it is pulling back. That says the dreaded H. That's a pattern that we talk about very often. What's the dreaded H? In my CD introducing the ChapmanWave methodology, chapter 17, from slide 332, I talk about the dreaded H. Let's go to our first caller. We've got Dan in Miami. Hi, Dan. How are you?
Hi, Basil. How you doing?
Very well, thank you.
Hey, I've been following Apple on the weekly and daily. It looks like the weekly is kind of settled into some good support there. The daily has obviously been in trouble a little bit. You think that we could get a sizable, counter trend on this thing, or what? I'm having phone problems here. Sorry, I can't hear you too well. I'm having phone problems.
Oh, okay. That's why you're a little face. Oops. There it came. Now you're there. So I'm hearing an echo, but in the meantime, I'll keep talking. I'm sure my engineer will work it out. There it is. So the Apple chart broke in the monthly, but it made a doji top. And how did the doji top work? It worked out because if you look at the yellow line, the fast-moving average of the MACD, I'm pointing to it right now in the monthly chart, it went with the price. And if you went long Apple, right as it crossed positive on the monthly basis back in July of 2009, let's go to the high of the 165 round number high, it continued high all the way to 705.07. And only at the point where it broke down, which was the month of December last year, when it went under 501.23, under the 9-period moving average, even if you just use that one technique, you would have made $300-400 on that particular price. Now look at this. There was a divergence, and this to me is most important, a divergence between the stochastic at that level, the relative strength of that level, that's this indicator right here that I always have right there, but the on-balance volume took you to that high, and then it turned down. So that's the reason why I always say, you've got to use a number of tools. You've got to have your toolbox ready to be able to identify which technique is the one that's going to not recycle up and confuse you, but the one that's going to give you the turnaround. Now, and I remember being on air and I said, oops, I think Apple has made a hat-trick top. Then that doji candle, I spent a lot of time talking about this, the tiniest little doji candle for its stock that's trading at $705 on the week of the 21st of September, and it goes to peak D, and that peak D is what you expect in the ChapmanWave for at least 4 peaks higher, and it pulls back. And now the reason why I would call this a shorter-term trade, if it was going to rally, is because the 394 level is the 200-period exponential moving average, this blue line right there in the weekly chart. Folks, if you're looking at my charts, the one on the right is the monthly, the one in the middle is the weekly, the one on the left is the daily, and then when I grab this one, it's usually the 120-minute chart. Now, here's the big thing. The daily chart says, in the patterns that I follow, I think I've done it. I'm just going to switch for a moment to the white charts because I know I've done this in great detail. Apple, there it is. There. Apple made a peak B minus failure, started pulling back, went underneath the low of 435.86, and now it's trading at 431. So you're not in the trade, you're just looking at it, right?
Right, I kind of...
Okay, so just before we go to the break, I just wanted to ask a question. I'll be right back, and I'll talk about it and how it's going to impact the Qs straight after this. Basil Chapman, Tiger Technicians Hour, 877-927-6448.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. . Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Dow's up 147, S&P's up 16. We're on with Dan in Miami. We're looking at Apple and questions about Apple. Where is Apple going to go? So Dan, this is what I'm looking at. There was a doji low in the 120-minute chart of great importance because it was part of a trend line that's been coming down in the 120-minute chart. The previous major buy signal in the 120-minute chart went from a low on the 4th of February at 442 round number to a peak D. As I said, 120-minute charts are amazing. They give so many peak Ds. Nice swing trade technique. And what does it do? It goes to 484.94 at 11:30 on the 11th of Feb. Then what happens is starts down, and it makes a beautiful left side, right side price time match and breaks the left side low of that round number 440. What did I say? It was 442. And it breaks it. The 442.57 is the exact day of the match from the left side to the right side. But then the next day it breaks it and it goes to 438.44, and then it goes to 437.66 with a doji candle. And the stochastic was good, but the MACD gave a signal that says there could be a rally, but not very much, and then there has to be retesting. And this is another thing I'll be discussing in great detail on Saturday. What is the MACD, the fast-moving average distance between the slow-moving average? How can you use that? I discuss it in my CD, but not as in great detail as I will on Saturday. Then what it does an arch, and it breaks down, and it goes to the low of, must have been, is it today or yesterday? Yesterday, of 419, another round number low. This one I like. I think that Apple at this particular point, let me just put RN, low. I suspect that the 419 low won't be taken out for a little while, but even more important, here I'm watching volume. If there is a huge volume spike today, it would be very important because it is what I call a silent, I can't call it a candle, just a silent instrument in terms of giving a clue as to shorter-term direction. And what this would say is that if Apple, by Friday afternoon, today's Tuesday, by Friday afternoon, it doesn't have to close there, but if it's able to test 438.18, the gap down high of the first of this month, and is able to at least get into that bar, but preferably if it's even able to touch the inside of the bar before 441.41, so the other numbers, 438.18, if it goes above that, that's really good. But if it's able to go into 444.41 into that bar, then I would say not only has it broken a downtrend line, but then the Fibonacci extension kicks in, and that says that the next level of resistance will be right at 451.54. I'm calling this a counter-trend rally because my suspicion is at some point Apple is going to have to test for further proof of strength the weekly? Yes. No, it's the monthly trend line of, is that correct? No, it's not. Wait a minute. Let me go back to the black chart. I can't remember what it was. It was there it is. So the weekly chart has 394. So at some point it'll come back and test between 394 and 363. To me, that's going to be an incredibly important support level for Apple. But more importantly, the weekly chart on the black chart, the black background chart, that's the one that shows you much clearer. I think people can see it. 462.97 is the 9-period exponential moving average that Apple has not been able to close. It's been able to break above it fractionally intra-week, but since it broke down on the 5th of October, it has not been, 5th of October 2012, it has not been able to even close once above that 9-period moving average. I suspect that this is going to be the opportunity as fund managers say, you know what, I'm trying to go for something that's really beaten down. I want to go with something that has potential upside. I know that Apple's a good company. I think I'm going to take a chance, and that's my suspicion. So I'm going to be watching this really closely. So I hope that helps you. What would be a breakdown? A breakdown is if it closes under 419, certainly if it takes out the 419 round number low and closes below it, that'll say, not ready yet. But I think in a way it's ready for at least a decent bounce. Hope that helps you.
Yeah, I watch the stochastics on a pretty much daily basis, and the monthly seems to be sort of setting up for a nice flat spot going forward too. So I think possibly that could really help it a lot. But
actually, the way I'm looking at the monthly in the stochastic and the MACD is that they aren't yet showing any sign of strength. We have to wait for the whole month of March to take place. What is setting up is that the weekly chart, although it's flattening out at 10%, it has the capacity to pop to about 17%, maybe 18%.
Right.
And that would be important.
All right. Thanks a lot.
And just while you're looking at look at your stochastic on today's candle. You'll see that for the first time it's making a nice V shape from down at the 6% level. So that's the one to watch. So if the stochastic goes from 6% even just to 12%, it's going to help Apple get to 438 or higher. So I hope that helps you.
That was excellent. Thanks.
Thanks so much for calling. I always appreciate your call. That was Dan in Miami looking at Apple. AAPL trading at $432, up $12 right now. Now, let's go to a couple of things. If you're looking at Apple, let's just look at Google. Google, let me go to my white charts, although it's really nice in the color of the black, but I'm going to go to the white charts because I've done a little bit more work on that. GOOG. Look at this. Google is in leg C up in the daily, leg D in the weekly, and I'm going to call this, just for now, to be conservative, F/B in the monthly, but I have a feeling that I'm going to change that. I'm starting a new technique now. I've talked about it, and occasionally I do it, but I'm going to make it an official technique, and I'll be giving my students on Saturday a heads up on it. How I'm going to start implementing the alternate wave count. At what point am I going to give a preference? There was a chart I did just a little earlier. Let me just see. So Google's acting very strong. Look at the way it's held the 9-period exponential moving average. Just too beautiful for words. Look at LinkedIn. LinkedIn, I have a difficult time talking about LinkedIn because we missed holding it by just a fraction. And then it just took off. We had it at 122. We got about a point or something profit, and then the earnings came out, and it just literally took off without us. It was a great shame because if we were holding it from 122, it would be up $53. But anyway, it's in leg B up in the daily. It's in leg. I've got it as an alternate count D/B in the weekly, but this week I might change that to B/D, which shows the preference, which gives you a really big heads up, because it's like monitoring. That's what the ChapmanWave does. It monitors and gauges each successively higher peak. It's the waveform that never sleeps. In other words, every single higher peak or lower trough has an implication. There are no techniques that I know of that are like that. You have to wait for a particular point to come into to focus, or volume, or a Fibonacci figure. This is very different. This is monitoring every single thing about it. So you don't have to overthink it if you look at the bigger time frame of a weekly or monthly. Hey, let's look at Google. There's one other. I wanted to talk about, I wrote it down here. Yes, I wanted to talk about the volatility index. And now I'm going to, before I do that, I just want to show this real quickly, and we've got callers on the line. I wanted to show this really quickly. Look at that falling axe pattern. This is some very simple patterns. You don't have to know math. You don't have to know anything. You don't have to know science. You don't have to know anything, or biology. You just have to look at the pattern, and if the pattern unfolds, it can be really beneficial. So we've got leg B up in the daily of the Dow, leg B up in the S&P, and we've got leg D in the 120-minute chart, which says, okay, you got to be a little careful now, maybe getting a little extended, but there are no signs yet to say this happening. And the VIX is down at 13.31. Remember what I said? 3 letters a long time ago. It's all you have to make your focus 3 letters: VIX, or the 3 bears, VIXy, Bondi, and Dolly. But the dollar did run up, VIX didn't. Let's go to Dan in North Reading. Hi, Dan. How are you?
Hi, Basil. How you doing?
I'm doing well, thank you.
I started a long position in Genworth a few days ago.
Oh, congratulations!
Got kind of lucky on this. So, wondering what your thoughts were, where it's headed.
This is a stock I love. I mean, I'm upset. I've got a whole list of $5, $6, $7, $8, $9 stocks that we've been looking at. We actually have a couple low price stocks. One that we got in the 5s is now in the 6s, so that's working well. But this is one that was on my list, and the reason being, let me just show you. I'm going to do this quickly. This is leg B up in the daily chart. Your entry, which must have been somewhere around 8.55 or something like that.
Yeah, I think so.
That's just beautiful. And let me explain why it's beautiful. Because the leeway that you have now, because I have this is one of the reasons why it was on my list. I had the potential for an instant restart in the weekly chart. What is the instant restart? I can't make it too complicated here, but it's when after the 4th highest peak D, the price pulls back. It barely pulls back. It takes only 2 to 3 sessions before it breaks out. And as it breaks out, that starts what I call an overlapping wave. It's either E/A, and as I've typed in here in the weekly chart, F/B. And now we've got G/C, but there's no question that this is leg C. I'm not even going to discuss it. I've got leg C in the weekly, but it was really the monthly chart, which I've got it in the black ones. Let me just finish up quickly on the white background chart, C, that I thought had a chance to start a brand new buy mode underneath the previous one. So 615, 604. So here we go. This is AB. This is leg C in the monthly chart. And what's so exciting about this is that it's totally ignored. Genworth Financials, Inc. at $9.68, up 59 cents, up 6.49% today. The monthly chart is starting to make improving technicals very quietly. And very quietly as well, after that big run-up that it had from the 70 cent level back in December of 2008 all the way. It's a huge move to $19.36. It plunged down to the most recent low of $4.06. So you've got it at about double the price of the low, the most recent low, but you've got it way off the previous high. And the target that I have for it is $10.17, which is the 200-period exponential moving average in the weekly chart. So I love your entrance. And the reason why it was so good is because it's broken out above the last high of 9.48, which was peak D. The stochastic is running very strongly, and the MACD today is just, the day's young, anything can happen. But so far, it's the first time that the MACD has crossed positive since it crossed negative back on the 30th of January. So that's a good sign, because if the MACD is going to remain positive, it says not only should you get higher peaks of C and peak D in the daily chart, but you might even want to add to this if it just pulls back towards the low of the day of today, 935, or even get into the gap of 920, and that one must have a much tighter stop. So I think you've got a great core position. If you're thinking of adding to it, I'd add it to it somewhere towards the low of the day today. I actually wouldn't like it to go into the gap, but if it does, then the gap area would be somewhere around 925, 924-ish. And the preference that I would have is that tomorrow it pulls back to about 949, 950. I can have a look at it again to see if it's possibly one that I would like to add to the list, because what I've been mentioning to my subscribers for a little while now is there's absolutely no reason for us to go into, for instance, I like Google, but I don't know why I want to buy a stock, either a stock in the 500s, the 700s, or anything, when you can buy a stock that has exactly a beautiful chart pattern, and it's trading at $9.70, and it looks like the company has survived the worst. You know what I'm saying? That it's fundamentally, the technicals seem to imply the worst is over, and maybe the upside is limited, but the chart pattern says, wow, it's a very nice looking stock. So congratulations.
Yeah, thanks. I don't even know what the news was the past 2 days, but it's I think 7% days in a row. So I don't know if it has to do with this mortgage insurance with Australia or what? But
I used to know a little bit more about it, but I do not want to even discuss it now because I'm not a fundamentalist. Yeah, I'm liable to say the wrong thing. But
I didn't really look into it too much either. I was just looking at the price.
MACD and the weekly stochastic are fabulous. I think you've got a great entry point, and I'd be looking, do a little homework, of course. It's 120 minutes. Say the 120-minute chart says. This is A, B, C, D, E. Yeah, this is leg E, and it's probably peak E coming up. Yeah, any pullback, and if you're thinking of adding to it, those areas I mentioned would probably be an area that must have a much tighter stop. I think you've got a great entry point for your first entry. Congratulations.
All right, thanks, Basil.
Thanks, Dan. Dan in North Reading, Mass. Looking at GNW. Genworth, it's at $9.70. Nice looking chart. I'll be right back after these messages.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman. I was asked about the dollar. And then I just got a quick in the dens. Rob asked about silver. Sure, I'm going to look at that. I just wanted to say I used a Phantom Peak, a ChapmanWave Phantom Peak. I forgot about it because I change the color. For some reason, I never changed the color. It was back when the dollar had made its low at 78.92 on the 1st of February. It went to peak A on the 12th at 80.51, and then it went to peak B at 80.62 because 80.60 was the next bar on the 15th, and then at C it went to 80.73 on the 18th. So I've got D now. The official D is 81.51 with a lower 81.48 low on the 22nd of February. And then there's this wide-legged doji, a long-legged doji. That is a clue that says at some point very soon, the dollar is going to test 81.57 to 81.67. It's at 82.22. But if I follow this rule of thumb, this is an E to an F. But as we will go through on a Saturday session, I'm going to explain when an instant restart, which this could be, an instant restart can be ignored because there's a greater chance that it's going to go to an F and then a G and then fail. And that's what I'm looking at the dollar, that it is really close on the daily to pulling back. But the 9-period moving average at 81.80, that's strong support. And then, of course, you've got the doji candle that I just talked about a little lower down. Most importantly, the weekly chart is in leg C up, and that's very strong. If I look at the monthly chart, this is just a little counter trend move. It's just a mere nothing in the scale of the dollar. To really be something, the dollar has to go into the 86 area. Then you're talking about an impressive move. At this point, it's actually one of the weaker rallies that it's had altogether in the monthly chart. So, with that said, silver, SIK 13. SIK 13 is attempting to rally. I suspect that gold and silver, if you don't mind, I'm going to put the two together. I'm a little bit behind on the... there's a delay. The 9-period exponential moving average in the gold contract, this is the April contract, and the same thing in the silver, looking at the May contract, that 9-period moving average at 28.89 with the flat stochastic and the MACD trying to work. I think there's going to be a sudden pop-up in silver, maybe a little later in the week. But I'm looking at the stocks and I'm saying, wow, I think money is just coming out of all these materials, gold, silver, even crude oil, and coming into the stock market. It just looks like that. So the question is, what about silver? My answer is that until silver can break above 29.49, and I'll do the quick as we're about to. Folks, we've got the option hour coming up in a moment. We've got David Keir. Should be, these are great shows. I'm looking at. So shows all the way through the afternoon, all the way to Tom O'Brien, wrapping it up 4 o'clock till 6. I'm looking at this pattern that says that the H could go to an M, and the M could be a continuous M. So until the SLV, let's go to that, can break decisively above 28.50, I would even say it needs to go above the candle of the 15th, 29.14. If it's able to do that, I'll be a little bit more impressed. I was thinking of getting into some gold stocks this morning, and then I was also thinking about buying maybe the smaller GLD. And then I said, you know what? There are so many nice-looking stocks. Why would I mess with these things when they're only in a counter-trend rally? So that's the story. Folks, if you want to sign up for my course, all you need to do, go through this. If you've been through my CD introducing the ChapmanWave methodology, or been to any one of my webinars, or my Level 1 Master Trader Series, please, this is going to be a really exciting one with exciting folks that work with the ChapmanWave all the time. I'm looking forward to it. Go to my opening call. That's my service. We've got 6 stocks. 6 stocks are up right now. Nice. I like that. Stay tuned. Option hour coming up. Best option show on the planet. And I will be back tomorrow. I'll also be back with Thomas afternoon at 4:20.